Hello traders, welcome back to my YouTube channel. Today I will be exposing to us how you can easily catch explosive moves like this very one here that happened on EURUSD during CPI news. I'll be exposing to you guys how you'll be able to catch moves like this using multiple confluences with hardcore precision. Trust me, by the end of this video, you will certainly gain lots of value. So first of all, let me show you what I saw in the marketplace first that made me came up with a bearish narrative. Let's go up to our weekly time frame, EURUSD weekly time frame. Sorry. So over here, you can see we've been having series of downward candles. As you can see, we've been ultimately bearish on EURUSD. This is a bearish candle. This is just a little pin bar. This is a bearish candle. This is a bearish candle, bearish candle, a bearish candle, and this very one is a bearish candle. And what gave me the first confluence that made me to come up with the bearish narrative was this very weekly FVG that was properly situated here after this previous week's candle was created. Now this is the weekly FVG, weekly fair value gap. Whenever you see fair value gaps like this in the marketplace, you should be able to decipher that. You should be able to understand that more of the time, the market will always trade into it and continue towards its previous intended direction. You understand? The market was bearish, and all of a sudden, we started seeing. If you go down to probably your daily time frame, you'll notice some sort of bullish movement to the upside, targeting to fill up this very fair value gap that was created here. I think 2 weeks ago or thereabouts. So as the market traded towards the FVG during the CPI news, used it as an opportunity to continue dropping lower. So it's not just about spotting these fair value gaps in the marketplace and just entering aggressively. This is the weekly time frame. You can't just do it that way. You certainly have to bring it down to lower time frames so you can be able to get the precision you desire. So as I saw that fair value gap that day, I mark it up and I shared it to most of my guys on my Telegram channel, which is on the link in this on the description of this video. You can always go through it, can join, and most times drop free trading content, free analysis, free signals, free outlooks, and all that. So I dropped it over there. So after price dropped there, dropped into that FVG, I went down to my lower time frame. I think that was my 2-hour time frame. I love 2-hour time frame a lot. So this was the tap. This was when price tapped into the FVG. Now this is the weekly FVG as I marked out. Let me label it. Sorry, give me a second. Weekly FVG. Excellent. So from that very place, don't forget we've been very, very bearish. You won't see a bullish market. Let's assume we're actually having series of higher highs and higher lows. You won't see an opposing FVG like this very one, and you intend selling from there and targeting this low. You get, like, if you were actually bullish. So in this scenario, it was very much understood that the market was bearish. As you can see, the market was creating series of lower lows and lower highs, lower lows and lower highs. So it was reasonable enough to come up with a bearish narrative, and coupled with the fact that this is a strong zone. As you can see here, markets broke down out of this very level, and this is some sort of I don't trade breakout and retest, but like this, some sort of breakout and retest. Do you understand? So after price traded into that FVG, and talking about multiple confluences, there are lots of confluences that we actually line here. If you look closely, you will see these two candles here, these two bearish candles here. This is your breaker block. These two candles there are your breaker block. you can just put them down here, put it this way to be your, or maybe let's just use a different tool, sorry. Let's use a different tool, but like you just need to understand that the two candles there are your breaker block. Let me do it this way. Sorry. So that's your breaker block level. So the first confluence was the weekly FVG. Then I came down to breaker block, that's VB. But right. Yeah, I came down to my 2 hour time frame. I spotted this breaker block, these two candles. It is a valid breaker block because it is meant to be an OB. It was meant to be an OB that was meant to hold price, but it failed to hold price. As you can see, it is a valid OB because you can see what happened there. It was a valid breaker block because you can see this low it took out here. You can see this very high. It took out here as well. This was some sort of market structure shift to the upside, some sort of market structure shift to the upside to make lots of traders to place a buy limits or to decide to buy from this level. And as much of them that bought from this level without knowing that the market was actually very much bearish, they took a loss here. So having a good understanding of institutional order flow will help you understand most of these things more of the time. So knowing fully well that the market is still very much bearish, I was able to decipher that this is just a breaker block that price will still later come back in the future to work with. And that was certainly what happened. So price moved correctionally into that level. Do you understand? When price is moving in this very style, when it is finding it difficult to trade to a certain level, this is when you call it out to be like, let's say market is in a correctional phase. In such phases, the market tends to be very, very dirty. The price action trend tends to be very, very dirty and rough. Look at these other ones. Look at the impulse move of the bearish movement. Look at how impulsive it was. There was no correctional move here. It just moved straight towards. This is institutional order flow. The order flow was clearly bearish. But like, look at the bullishness. It was just very, very sick. The bullish movement was just very, very sick and disturbing. So you wouldn't want to find yourself in this type of market. Although I was able to scalp intraday trades out of this movement as well, but like it is more of the time not advised for newbie traders to do that. It is best advised to trade alongside the institutional order flow. So after I spotted that breaker block, the next confluence I saw was Ict inversion FVG. This inversion FVG is as well very powerful. So this is one of the ways to frame your trade idea with multiple confluences. In cases when lots of confluences are backing up your trade ideas, like this one, inversion FVG. Let me just put it this way, IFVG. So in cases like this, when there are lots of confluences backing up your trade idea, and it gives you more confidence and it makes your trade to be of more high probability. And also, as you can see here, there was this, just like as I told you, this was a correctional move. So this is what I call trend line phantom. Trend line phantom is just let me not just go into details. It is just let me just put it here, PH, trend line phantom. Yeah, so cases like this, when market build up liquidity like this, you certainly be sure that it will always come down to take out the stop losses that were placed in the marketplace on the lows against the institutional order flow. You understand? So after price traded into this FVG, it first displaced to the downside. The displacement led to structure shift to the downside as well. This is a structure shift. This low that was taken was what gave me confidence to be sure that, okay, price is ready to continue lower. It's very low here, as you can see. It's very low here, as you can see. It is where we had our, sorry, this very low here was where we had our first structure shift to the downside. I call it market structure shifts. Center, yeah. So this was our structure shift to the downside. You can call it your break of structure or whatever. So after we had that structure shift to the downside, what else should you expect in price? You should expect price to retrace into the premium array of the previous established displacement. This is the displacement that we had after price read into our higher time frame PD array, being our weekly FVG. After we had that displacement, price needed to trade into the discount. Price needed to trade into the premium. Where is our premium? Let's take our fib and check it out. Yeah. So our premium is above our 50%. As you can see, this is our 50%. So every other thing here is our premium market. So this is the best place you can look out for confluences. You can look out for PDREs. You can sell from, as you can see. So let's take our fib out. So I'll try to look that much the T. So as you can see, this is a valid order block. Why is this a valid order block? Now let me explain. As you can see, it took out a high inside its POI. Inside the POI, it first traded into the POI it traded into being this weekly FVG, 2-hour IVG, 2-hour inversion FVG, and this breaker block level here. Do you understand? So these are three strong concurrencies price traded into before it is displacement. Do you understand? So the very last candle, the last upwards candle before the bearish movement is your order block. As you can see, it is properly defined because it took out this high here, led to structural shift to the downside. It has FVGs close to it. So this is our valid order block. This is our valid order block. Exactly. Now let's label it OB. Bottom right. Excellent. Now this is our valid 2-hour order block. Now, first of all, as price was retracing into the premium array, it got to this certain level and started moving lower. Now, this will be considered as inducement. Why? Because it did not trade into our POI, being this very order block. So this will certainly be considered as inducement. And lots of traders, you chase the market. Lots of traders that don't really understand how this market works, you chase the market thinking probably that the bearish move has already started without knowing fully well that this was just the market trying to manipulate people that doesn't understand its ways. People like me, we stay off the market till we see the precise thing we are waiting for. Do you understand? So we waited confidently and patiently as price traded into. So let me just put it this way: inducement. Yeah, short form. Excellent. So we waited patiently on this very day, being, which day was this? So on this very day, during CPI news, that was the day market decided to drop drastically. It gave a very crazy drop, and which we got it. So entry level will be from the lower level of the bullish candle, like the bottom of the bullish candle being our order block. My entry was there. My XL was just at the high here, somewhere here. And my first target will be this low, is our sell side liquidity. This low, this relative equal lows, is our sell side liquidity. Sell side liquidity. So you engage from there, and that was the level I was paying very much close attention to, and that is what I called institutional level. This very 1.0700. This is what I call institutional level. Let me get my settings right. So I just targeted that institutional number because I was very much confident that price was coming for that very, I was very much confident that price was coming for that very institutional number. And as it dipped itself into there, it started retracing to the upside. So this is how you catch explosive move like this, putting together multiple confluences, multiple solid confluences, getting the whole thing right without messing up in the marketplace and market taking off hard-earned money from you. Do you understand? Now, in cases like this, it is best advised to just pay yourself probably from these very relative equal lows here to, probably if you're not that much certain of where the market is going, and just pay yourself at this very low. And this is the total of it is 1:7.6, as you can see here. But like if you took your profit right from, if you took your profit from this very low here, it will still give you above 1:5. As you can see, this is 1:5, almost 1:6, 1:5.7. So this is as well massive. Understand? So if you can discipline yourself to wait for high probability trades like this, trust me, the rate at which you take losses as a trader, probably as a developing trader or as a struggling trader or a break-even trader, just at which you take losses or the way you get lost in the marketplace, you reduce drastically. And it will help you to tame you. You won't be chasing intraday moves that are irrelevant, like these moves that have been occurring all this while. This is the major move you should be focusing on catching. Moves like this. These are the major moves you should be focusing on catching. Do you understand? I think this will be all for it. So in case you want more of educational content like this, can check the link in the description, link to my Telegram channel, description, where I drop daily market outlook and signals, and as well meet like-minded traders who are as well dedicated to making this whole thing work. Okay, I think we'll be wrapping it up here. Thank you very much.